Good morning, everybody. Welcome to another iteration of Value Investors Edge Live. Our first guest today is Omar Nokta, Head of Shipping Research at Jefferies. I'm excited to have him here on the platform today to talk with us about his decades now of experience in the shipping markets and just overall insights. So Omar, good morning. Thanks for joining us here.
Hi, Jay. Thank you. Good morning to you as well.
So you've put out a lot of research reports, of course, a primary role. You put out a lot of yearly outlooks and things like that. Have there been any big surprises so far in 2023? Things that, got you and I or everybody off guard?
Yeah, it's interesting, right? Because we always have our view on what we think the setup is, and then end up things are a bit different. I would say dry bulk has probably played out as anticipated in terms of, okay, people were excited on China reopening, but it didn't seem like it had a lot of legs. What I would say is probably surprising is tankers. I remember coming into the year, there was all the talk of, you had the Russia crude export ban into Europe and then the product export ban, the price caps, China reopening, the low inventories. And so to us, it looked like you were going to have this year for tankers, which was just going to get stronger and stronger with each passing quarter. And then what we didn't necessarily take into account was just how aggressive Russia was able to export both crude and product in the first few months of the year to build up inventory, which then caused OPEC to cut production. And so we actually felt that VLCCs with each passing quarter would average higher. And it's actually been the opposite. The stocks have held up and done, I would say, very well given the pullback in earnings. The surprise has been the fact that tanker rates have gone the opposite way than we anticipated. The other big surprise is definitely LPG. Early on, we noticed that there was just a big divergence in the price of U.S. liquids, both NGLs, propane. There's a big difference in price between the U.S. and global. So it looked like the market was going to be able to absorb a lot of the excess new build capacity. But what surprised us is just how much NGL production there has been out of the U.S. market. I mean, the U.S. is by far the biggest exporter of LPG globally. 10 years ago, the U.S. was not on the map as an exporter. Now we're the largest. Not only that, but exports are up 20% this year. So the U.S. has been able to create a lot of propane for export and then basically utilize all the new building capacity. And now rates are, 100,000+ per day in the VLGC market. I don't think anybody anticipated that. And I'd say that's clearly the biggest surprise of the year.
Yeah, certainly makes sense, Omar. And I think our levels of surprise on different sectors are similar, especially LPG. We definitely share that one. And then tankers, yeah, I mean, weaker on average. And yet product tanker rates have been very strong for this time of year, right? I mean, we're on track right now for the second or third strongest September, right, in modern history. Any thoughts on that? Is that saying anything to us? Is that just part of this dislocation? Is it a bullish signal? Is it concerning? What do you think about that?
Yeah, I think you are right. I think between maybe 04, 05, 22, 23, these are record times in terms of product tankers at this time of the year. I think it tells us a lot. It tells us that demand is very strong for oil. And even though OPEC has been trying to really tighten the crude market, there are a lot of refineries that shut down, and now what's left is immensely profitable. So I think when we look ahead here, product tanker rates are very, very strong, despite the fact that VLCCs, Suez's, and Afras have pulled back. And they're feeling the brunt of the limited production out of OPEC, but product is completely insulated. And what we think is interesting is just imagine where these product rates will go once you get that overhang from the crude market lifted. So we actually think the product outlook is very, very firm. And the sectors, you said, Jay, they're generating very strong amount of earnings at this time of year. We haven't even began the winter trade, and we haven't even benefited from increased OPEC volumes, which at some point will come. And all that, I think, just tells us that products are about to jump even more as we look ahead over the next several months and quarters.
Well, hey, Omar, thank you so much for taking time out of your schedule this morning to join us.
You bet, Jake. My pleasure. Thanks for having me on.
Absolutely.